So student accommodation is one of the asset classes that's really grown in popularity for investors in the last decade or so. And there's a lot of characteristics, and you can see why. So I thought I'd talk to one of the managers running one of the most successful companies in that space. In fact, the first real estate investment trust listed on the London market investing in student accommodations. So welcome, Nick Parker from Diggs. Now, Diggs is not technically the name of the company, it's the ticker code for
GCP Student Living.
And your investment management company you're part of is Gravis, the ones with, I was going to say turtle, but you correct me, it is quite rightly a sort of tortoise, isn't it?
That's correct, that's right, yeah.
Now, I said in the intro, student accommodation as an asset class, particularly for UK-based investors, has kind of seen huge growth in terms of relative to where it sort of started over the last sort of decade. What do you think has been sort of driving that growth?
So the way I look at it is I sort of try and sort of look back and sort of see what were the forces that sort of led to the creation of the purpose-built student housing market in the first place, and then what has happened since to exacerbate that. So student housing arose from a need for accommodation for students that universities weren't delivering, and policy changed what universities could do. So and that actually changed further more recently with the introduction of the tuition fees. So universities can no longer use the tuition fees that they're earning from the students to then fund accommodation on campus. They also had restrictions imposed on in terms of what they could do with their own balance sheets to fund new development. So that provided the opportunity for the private sector to effectively emerge. And then I guess the other reasons why student accommodation has become such a big sort of mainstream sector or asset class, as you described, is down to the fact that actually it now exists as a product, and portfolios have been created, the assets have been developed, and because you're talking about students in densely occupied buildings, these buildings are actually quite big and quite valuable, which then means that the type of money that can afford it needs to have relatively deep pockets. So it's meant that the institutions have come into the sector effectively.
And when people sort of look at property-based asset classes, the liquidity becomes obviously an issue, and 2019 we sort of saw that some of the issues with the broader property portfolios. What kind of liquidity is there in a sort of student accommodation sector? Because it strikes me, you have sort of 20-25 year agreements on assets that you own. If you needed to raise capital quickly, you wouldn't be sort of suddenly kind of ringing somebody going, do you want to buy a sort of 400 bed student building off me? So it feels like there isn't a huge amount of liquidity. How do you look at the liquidity issue?
So I think we look at liquidity in more than one way. There's the liquidity in terms of the underlying asset, and then there's the liquidity around the structures that hold the assets. In terms of liquidity for assets, I think it's relevant to then look at the volume of transactions that take place in this space. And 2015 was, I guess, the all-time high, or the record sort of year for student housing in the UK, with circa 6 billion or so of the assets traded. But then since then, we've continuously seen around 4 billion or so of assets trading each year. So I think what that demonstrates is that actually properties do get bought and sold. There is a marketplace, and the assets do trade, and there is liquidity for the properties themselves. Then another thing that's sort of interesting is what types of structures own student housing and what type of investors are in the space. And you rightly mentioned that here in the UK, with the open-ended fund structures that we see in commercial property, in periods of uncertainty, we can see sort of quite big issues arising in those funds. Student housing wasn't really any different a few years ago, so there were open-ended real estate student housing funds.
Unregulated collective investment schemes, weren't they?
Basically, So the names that come to mind were Brando, Opal, Mansion. Those funds don't exist anymore. GCP Student is a closed capital company. There are two other student housing REITs. And then if you look at the other big market participants, you've got big sort of sovereign funds, you've got large institutional investors.
I think the Wellcome Foundation is an
they've been in
one.
the sector for a very long time.
Yeah.
But you've also got like Brookfield,
Yes.
you've got Canadian Pension Plan, you've got, more recently we've seen some new entrants, Singapore Press Holdings and the DWS, the Deutsche Bank asset manager. And I guess all these new and some long-term investors, they've been in this marketplace and they have been buying and selling, and we have been seeing these large volumes of transactions. So there is strong liquidity in student housing.
So actually, from what you're saying, if transactions are around sort of 4 billion a year for the last sort of few years, and that's a low, or it's down from the peak. Yeah. Would it be right to say there's a bit of a bubble in this asset class? You've talked about some very big investors in terms of the amount of capital they manage. How do you sort of see it on the sort of that kind of thing?
So I mentioned that student housing has sort of emerged and has become a mainstream asset class. The thing about student housing is that the product's grown with the market. So I think it was circa 30,000 beds got delivered in student housing last year. There are developments coming throughout the UK, and that's sort of satisfying some of that demand. The other thing is that different investors have different return aspirations, and therefore you are still seeing trades between the different owners of the asset class. And in terms of calling it a bubble, I wouldn't call it a bubble because if you look at where yields are today relative to its sort of historic basis, they are slightly lower, but then we haven't experienced the type of yield compression that we saw back in 2015 when we saw that 6 billion or so of assets traded. So the yields have been relatively stable, but what I find more encouraging is you shouldn't just look at the yield, you should also look at what's happening to the income and whether that income is growing, and income is growing in the student housing space. So if you look back, I think you could probably go back to when student housing started in the 90s, back in Bristol. Student housing has only ever really delivered income growth each year. Yes, there will be asset specific and certain cities in the UK where rents may not have grown 1 year, or maybe even it may have gone back. But as an asset class, if you're sort of looking at it across the board, student housing has delivered strong income growth.
And how reliant do you think the sector is, particularly in kind of London, on international sort of students? Because again, I mean, your portfolio, you've got a lot of London-based properties.
That's right.
And obviously one down in sort of Brighton, all of which are, have got strong representations of international students. I guess people kind of go, well, Nick, there's a risk there, isn't it? Because what happens if all the overseas students decide they want to go somewhere where the weather's a lot better? And there's plenty of choice on that basis.
Yeah. I guess weather isn't really the thing that international students think about. I think one of the key things that they look at is the strength of our academic institutions. And if you look at the sort of top ranking universities in the UK, quite a few of them are in and around London. And if you then look at student number growth in the UK, the universities that have grown the fastest in the sort of recent years have been the more highly ranked ones. So King's, UCL, they've all seen stronger growth than all other universities. The reliance on international student, though, is you call it reliance, you call it risk, but I think that's where the opportunity is, and that is why we exist as a fund in a way. The product that we deliver is a product that's sort of targeting international students, postgraduate students, and domestic students. But as you rightly said earlier, we do have a big cohort of international students in our buildings. Just to give you an idea of student numbers, so we understand there's circa just over 2 million students attending universities in the UK. Of that 2 million, it's about 460,000 international students. If you then look at the international students, where do they go? London has about 100,000 of those 460,000, so it's the biggest city in the UK and one of the largest cities in the UK in terms of the number of international students. And I then look at what's happening to that globally mobile student population, and it's growing. There are more students coming to the UK from China, from India, and I see it as an opportunity, and our product's there to sort of deliver the accommodation that they require.
Now I know having seen the prospectus for one or two of your the properties you own, I mean they look more like hotels than what people would traditionally think of student sort of accommodation. Is it because there's that for an international student in particular, if they're coming to the other side of the world, they're expecting something a lot better than perhaps you know, the traditional accommodation from perhaps 5 or 10 years ago, or obviously people old enough will think of, you know, the comedy The Young Ones in a bed sit somewhere. There's none of that. But, you know, yeah, I mean, the properties look, yeah, so they look more like hotels.
Lawrence, you're right. What I think has happened in our spaces, 2012, tuition fees were introduced. Sort of going to university was no longer like state-sponsored in the way it had been historically. And you were paying now just over £9,000 per annum for your education. And that instigated or triggered a mindset change. Students, when they come, not just international students, all students demand more from their providers. And international students in particular, they come with an extra layer, I guess, of requirements because, as you said, often they're leaving home. I was once one of those, and it can be quite nerve-wracking. You like the idea of going somewhere which is plug and play, where you're going to meet other people, but you want your life to be sort of easier, I guess. And what our buildings, and you mentioned hotel type service, what we're trying to do is effectively deliver more and what those students expect. Because that then leads to the sort of fundamentals of what this REIT's about, which is sustainable growing income year on year.
So there's not so much price pressure from the customer, in this case the sort of student. There's not a lot of arbitrage between universities just if the rent or the cost of accommodation is you know, I don't know, £500 a term cheaper than it is in another one. The criteria they're using is kind of different, and they want then better quality accommodation to go with the education they're getting.
Yeah, so I think the London universities have benefited from the private sector sort of reacting and delivering the better quality accommodation. One thing that's probably worth saying is that a lot of the purpose-built student accommodation market that exists, and our portfolio in particular, is a direct let model. So we have a direct relationship with the student, not with the university. So for instance, if you look at our largest asset, which is the one in Shoreditch, we've got students living in there going to 40 plus different higher education institutions. So they're making a choice for the accommodation, and it's separate to their decision around the university. But by being in London, by being above a major transport hub in Old Street, you basically then attract all of the students that are attending London universities who want that type of accommodation.
And you mentioned a couple of minutes ago, obviously we saw the increase in tuition fees in the UK for kind of UK-based sort of students. I think the other issue there was a demographic one. There was a drop in the number of sort of 18-year-olds. Has the demographic sort of moved more positively? So I think we're back to an increase
from next year. That's right.
Yeah.
So I think we're currently this year experiencing the sort of the bottoming in terms of the total number of 18-year-olds in the UK. So it's then projected to start growing again. What I find interesting is if you look at the stats, and you know we're blessed in this sector to have such good transparent data through UCAS and HESA, but if you look at the data, more 18-year-olds are applying to go to university. So although there are fewer 18-year-olds, student numbers are still increasing, which is encouraging. And then I guess there's another number that I always look at, which gives me some comfort, which is, I mentioned earlier, there's 2.3 million students in the UK. There's close to 700,000 students apply to go to university each year, and only just over 500,000 get to go to university. Right. So last year it was something like 160,000 students applied but didn't get to go to university. So in the student housing world, we talk about that as the buffer, because you've got that demand pool that hasn't got into university and keeps the sort of numbers growing year on year.
Interesting. Now, I said at the outset that student accommodation is often said to be an uncorrelated asset. Given that your company is a REIT, listed on the London Stock Exchange, it must surely be correlated with the perception of the wider kind of UK stock market in terms of how it performs.
Yeah, so I think there's been lots of studies into the performance of REITs and whether REITs deliver a property return or an equities return. I think in the long term, they've been able to prove that actually REITs do deliver a property return. One of the attractions, I guess, of REITs more generically is that they tend to be professionally run and they tend to hold good assets. So their performance, I think, is often stronger than sort of other forms of holding property. We've looked at this because you know we are a REIT, as you say, and REIT performance, we understand, over the last 10 years has delivered stronger returns than UK equities generally, and not dissimilar returns to what you'd expect the underlying assets to deliver too. So yes, perhaps in the short term, the REIT share price may be influenced by what's happening in the wider market. But I think in the long term, it then delivers returns which are sort of in line with what the underlying assets deliver.
And how would, looking forward, how would you expect the asset class to behave if we saw significant differences or moves upwards in inflation or interest rates? I mean, we're still, incredibly low, and the sort of perhaps 2-year expectations, or maybe 3 years, are still low. But if you're looking sort of 5 years out, maybe, what's the link between the performance and inflation?
So one of the great things about student housing is that every year you're rebasing the rents. So the students arrive for the new academic year. So which is different to wider commercial property. You may have inflation-linked leases in some property types of property, but you're here it's actually sort of real, so you're capturing it each year, and we're actually constantly marketing all of our rooms in our building, so you're getting a real sense each year of what's happening to the income and whether it's keeping up with inflation or not. In our experience, we've been going for close to 7 years, and each year we've delivered growth in rents ahead of inflation. And when we look at inflation, we've historically looked at RPI rather than CPI. In terms of what might happen to the asset class if we see changes in sort of the macro economy and interest rates, I think we wouldn't be immune. We would also suffer. But I think on a relative basis, and I mentioned earlier the types of investors who are in our sector, I think we'd probably be better. We'd be more resilient, I guess, because you don't have the sort of types of pressures that we may see in wider property. So I'm talking about student relative to UK property, rather than effectively in that question.
And one thing that's always kind of fascinated me about the sector is how do I differentiate between portfolios? Because, the REITs and one or two other sort of vehicles are out there. You're all buying student accommodation. It's largely based around UK sort of universities. And I kind of, I guess I can't figure out a framework to differentiate what's a good portfolio compared to a less good one. Yeah.
Well, I think that's kind of our job in a way. It's what I do. So what I'm trying to do, and what we at Gravis are trying to do, is sort of build a portfolio of strong, sustainable assets. So I keep it simple. I go back to locations. So one of the big things that's been happening in our sector, and I've talked about how 30-odd thousand beds have been delivered in the UK. Of that, it's less than 2,000 of those were in London. So one of the key things I look at is how resilient are the places from a supply-side response. So I like places with high supply-side barriers. So, but when I say keep it simple, I'd look at the portfolios. I try and work out which cities they're in. How big their buildings are, because I think that makes a difference. And for us, our sweet spot, we like buildings of between 200 and 600 beds. The reason why we like that is we can then have better gross to net margins, which is what then allows us to pay out a dividend to our shareholders. And I'd look at management, and I'd look at experience, track record. Those are the things.
Traditional things.
Yeah, but look at the underlying assets and keep it simple. Look at strength of universities, cities, and supply-side barriers.
So just to kind of carry on a little bit further, if I think Liverpool, for example, is the city that's got 2 or 3 world-class universities. I think it's got the largest sort of population of Chinese students in the UK. I think I'm right. Why would you not pick a city like Liverpool to look at, which there's been huge building there, and why have you just focused in and around? I mean, you touched on London because of the number of kind of world-class universities, and I think everybody will know King's and UCL, for example. Why have you not looked sort of beyond the southeast?
It's quite simple. It's all down to cranes, supply side, supply gluts. This sector, although we talked earlier about the last 10 years, but it's not a new sector, and people have got it wrong at different points, and we're basically sort of treading a very careful, specific strategy, which we think, we're a REIT. We want to be here in 20 years' time, still delivering income and sustainable income. So we basically are only looking to invest in areas of the market that we think won't experience those big sort of shocks that come through a lot of development happening at one time. And just talking about Liverpool, versus London, one of the things we look at is what's the the market forces. So is student housing the highest value use for that site? And in London, often student developers are competing with built-to-rent residential commercial developers, whereas in other cities where the yield for student assets and the rents that they can get means that actually student trumps all other alternative uses, and therefore lots of investors, developers and funders are all going into that space. But what they don't realize is that actually there's a herd and it might not be sustainable in the long term.
Okay, lovely. And just final question, if I'm an advisor, a wealth manager, and my clients have not been exposed to the sector, why perhaps would you argue they should have another look at it sort of, on a forward-looking basis?
I go back to performance in relative terms. I think student housing has, we talked about this earlier, but it has lots of the characteristics that I think means it should deliver better, more resilient returns. If you look at the asset class and the income growth, I'd be looking at the sector for income and granular income. So one of the key attractions of student housing is that it doesn't experience CVAs or big retailers going bust. So it's not binary income, it's granular income. And I think it would fit well in a portfolio to have some student housing because it's going to be there delivering good sustainable returns for you.
Super. Nick, thank you very much for coming in.
You're welcome.